Good afternoon, good morning. This is Mark Johnson from Loyalty360. I hope everyone is happy, safe, and well on this Friday afternoon, a week before Thanksgiving. I want to welcome you back to another edition of Loyalty Live. In this series, we talk to the leaders in customer channel and brand loyalty about the technology trends and best practices that impact a brand's ability to drive unique experiences, engagement, and most importantly, customer loyalty. Today, we have the pleasure of speaking with Jon Siegal, who's the Senior Vice President of Global Loyalty Sales for Cheetah Digital. Jon, how are you?
I'm doing great, Mark. Thanks for having me. How are you doing?
I'm doing well, thank you. Staying healthy, which I think is the goal these days.
Absolutely.
So as most people know, Loyalty360 has a member community where we meet with them in small-sided meetings, usually groups of 12 to 24 brands, and discuss assorted topics regarding best practices and customer loyalty, things they may be seeing on, working on, challenges, and discuss that in the community. And what we like to do is take that back to our amazing partner community, and Jon and Cheetah being one of them, to get their responses to some of these challenges and opportunities brands have to help them sort through, address, and ameliorate the programs they have. And the topic today actually is around tier management. We recently had a small-sided meeting around tier management and optimization during COVID, and also just optimization of the program in general. But it's kind of a huge challenge, right, Jon, with regard to some people may not be attaining that high tier this year, or they may not made different tiers because COVID has turned things upside down in different industries are kind of challenged, and some are doing well. So it's definitely top of mind. What are you seeing in regard to tier management and kind of management around the best practices?
Maybe a good place to start. I'm sure we have a range of people who are listening, or hopefully we do, and some may be more into this topic than others. But I think most people's experience with tiers, or one of the most obvious ones, is their frequent flyer program. So yeah. I'm an American Airlines Advantage member. And if you just join the Advantage program, you're a gold member and you can work your way up to platinum. I believe it's exec platinum is the highest, and then somewhere in between, like platinum pro is the one below that. And I mean, the whole idea here is especially for goal-oriented people, to drive people to do certain behaviors to move up that hierarchy, so that you become the most valued customer, and you're spending more or doing more with the brand.
Yeah.
And I think one of the great features of a tiered program is it's there for everyone to see. And as I mentioned, if you're a goal-oriented person, you want to aspire to achieve the highest levels that you can. But I think at the same time, that's also one of the risk areas of the tiered program, is that it's published, and once it's published, it's not as easy to change.
Right.
And if you want to make changes to a published program, you have all the challenges of communicating those changes. If you're taking benefits away or reallocating benefits, there may be other legal and business issues. There's certainly financial issues. If you make changes, the changes could have significant financial impact, positive and negative, to the business. So I think, getting back to your question, people are obviously in a normal time want to make sure that they have the right programs construct that's rewarding the right behaviors. In this environment, I mean, some people have had to throw out the book and really, rethink their business and rethink things. And so, the other alternative to a published program is doing things in an unpublished way. And I think we'll talk a little about this today.
Sure.
This has some significant advantages, and whether you have a published tiered program or you have no tiers in your loyalty program, using the concept around an unpublished program and being able to test and learn and see how things work could be a huge advantage. And it's something that we actually recommend quite a bit. So our customers are across a wide range of industries, Mark, and depending upon the industry they're in, the circumstances they're in are different. We have clients in the travel industry where they're continuing to push out the time frame by which you can qualify for these higher tiers or maintain your standard. With good reason. I mean, flying on airplanes is not an easy task today. Retailers, some segments of retail have done fantastic, right? And may not have to do those kinds of things. So I think the real world experience we're seeing with brands, it really depends upon the industry segment you're in, how you've been impacted by COVID-19, and obviously your own financial circumstances. dictate how you address the current environment.
Absolutely. So you kind of talked about a little bit of the challenges within respective industries, and Cheetah does an amazing job with kind of an array of products from loyalty and engagement solutions to really help drive unique engagement experiences that can help manage this. But what are you seeing with brands that make decisions on? Are they looking at extensions, promotion, non-extensions? Are the opportunities where they should buy maybe a fraction over a period of 3 months to keep engagement? What are you seeing, and what's working?
I mean, once again, it's very industry dependent.
Right.
In airlines, they're extending because the consumers, through no fault of their own, they're just not flying at the level that they did. And similar, in the hotel and other travel related parts of the business. So for them, giving people an extra year to maintain your status or achieve your status, it makes good sense because you don't want to create that negative feeling of taking something away from somebody or have him go back to square one, really to no fault of their own. Other segments, though, I mean, that doesn't make sense, right? If you're a retail business that's doing really well, why would you go extend? What you may want to do is really focus on things that are more appropriate for the current environment, right? Perhaps it's offering benefits around delivery or curbside pickup or things that appeal to people in the current moment, which is being concerned about their health and safety and convenience. Perhaps not having to be around crowds. These are things that are probably more appropriate if you're a retailer as opposed to the travel folks who have a whole different set of challenges.
Okay, interesting. So you kind of talked about the consideration for airlines where they have macro forces that are in play. How other industries, restaurants challenged as well. How should marketers, brands be looking at these kind of larger macro issues with things even on the last week starting to significantly kind of lock down in all areas, California where you are, Ohio where I am, other areas. How should they be looking at those macro forces, and how can they use potentially the loyalty program to help assuage some of those?
Well, I mean, clearly in this environment where it's happened very quickly in some cases, right, within a matter of days or weeks, that people coming into your place of business is perhaps stopped or paused. And this is where having a strong loyalty program is a huge advantage, right? Having those strong digital connections, because you can use those connections to message to your members, to encourage them to do business in other ways. If you're a restaurant, it's takeout, it's delivery. If you're a retailer, maybe free returns. If you try something on and doesn't fit, you can send it back. And so the loyalty program becomes the avenue to have that communication, because who these people are, you have a history with them, and you can navigate these very challenging times better. I think we saw earlier this year that brands who didn't have those digital connections were at a huge disadvantage, and the ones who did had a huge competitive advantage. And there's sort of a haves and have-nots, from a digital perspective. And loyalty has been a key to make that possible for the brands who have strong programs.
Okay. You touched on it a little earlier. What are some of the benefits and risks that you see with extending or downgrading tiers and programs? Obviously, travel, hospitality, you extend them. Are some other entities where maybe the middle groups may not be doing as well? We hear from most retail that have those digital presence that the top tiers are doing very well. There's great reciprocity, great engagement. What are some benefits and risks that you see associated with extending or downgrading tiers?
Well, I mean, let's start with downgrading. I mean, it's a negative consumer experience. No one likes the feeling of being told they've lost some benefit from you and your business. And so I think there's a risk, especially I think that the travel clients are a good example. When people can't travel and due to no fault of their own, to take that benefit away from them would be a huge mistake. You're creating a bunch of unhappy customers. I think at the same time, even when you're extending those benefits, there's lots of things that these brands can still do to drive engagement during the process. A lot of these large travel brands have extensive partner networks with their loyalty programs. And so this may be an opportunity, rather than trying to get people to get on planes or book hotels, maybe it's an opportunity to get them to burn down through various promotions the currency that they've accrued over a period of time. And you can target the different tiers accordingly and still drive engagement without having to feel like you have to take something away or reset somebody's status to motivate them to do something that they really can't do.
Okay, interesting. One of the questions that came up during this meeting is, should you give away points or extend tiers, or should you have a reduced tier purchase, depending on what it is, right? So maybe it's a restaurant who's maybe not getting the same traffic. You want to keep them at that same tier. If they have a tier, either explicit or implicit. If you spend $1,000 a year, usually maybe you spend 100 over the next 3 months. Does that help? Does that create some engagement? Or does it depend on how well you know the customers or some other external factors?
I mean, this is a question that's going to be very industry and brand dependent. The answer is going to be very different depending on what industry you're in and your circumstances. And I think rather than doing some wholesale change to the program, especially since we don't know, like we have lockdowns now, are they going to go away when there's a vaccine? Hopefully very shortly. So setting yourself in concrete boots with the change in your program may not be the smartest thing to do at this point in time. So I prefer the idea of being able to target customers in an appropriate way. And let's just pick an example, like maybe in a restaurant brand where perhaps people aren't dining as frequently, but it's not like a complete stop as in travel. You can figure out, looking at your customer data, who are the customers who have declined and by what amount, and use this as an opportunity to motivate and reward them with promotions or offers, things that would be a positive incentive as opposed to a negative incentive, which I would characterize, hey, you got to give me $100 or you lose your status, as a negative incentive. Or the sort of buy-up process. I struggle with that as a consumer, and I can't imagine recommending it to many clients as a result, especially in this uncertain time.
Okay, interesting. So maybe, obviously, you run a number of restaurant clients and do an amazing job with them. A lot of them have just redone their programs. What are there things that you may be seeing in there with regard to tiers, or even kind of the back end tiers and how they're leveraging it? Because people aren't eating out as much. It's something that's kind of a case study, or something that others can learn from in the restaurant industry.
Look, not all of them have tiers, and we have the same conversation with them that sounds like you've had recently, Mark, with some of the brands that you talk to. There's a lot of discussion around what's the right thing to do. And I mean, the restaurant industry is as competitive a business as any, and is dealing with, as challenging a time as any, with, the sudden loss of capacity in dining rooms for those restaurants that have dining rooms. It's a huge, change to their business. So, I think, our approach in the restaurant space is really not to say, hey, let's go introduce a tiered program, but I think an unpublished approach where, in today's environment, where you have really good customer data and you can figure out who's doing what and test and learn what motivates them, is a better approach and a more effective approach than all of a sudden either introducing a tier or changing those mechanics. And in the restaurant space in particular, I don't think it would be one where you'd want to extend necessarily. I think you'd want to be more targeted in your approach, which is the unpublished sort of targeted offers is a better way to do it.
Okay, interesting. Communication is a big challenge and big concern as well too. And I think you kind of touched on it, understanding the customers and segments, how they're going to respond and how they have responded. How do you advise brands to communicate the tier change or extension process to their customers? Should it be kind of tailored and targeted for that individual consumer? And how difficult is that? Or what are some best practices you would recommend there?
Yeah, I think part of the premise of this question may be that it's hard to do this. But it doesn't have to be. I think this is hard. The communication of these changes or of some of these incentives as they're needed to be communicated are harder because a lot of brands have a very separate loyalty area and a messaging domain. People are managing the messaging in one space, they're managing loyalty in another area of the business. They may have customer data in another area, and so it's getting all that customer data together to be able to understand what's going on, to then message, that becomes the hard approach. I mean, fortunately in our business, this is one of the problems we have solved, which is we bring all the customer data together in one place, and then all of the systems of engagement, messaging, the ability to, through websites and mobile apps, can use that information to communicate. So it's not a heavy lift when you have all your customer data together in one place, as opposed to what I think, the scenario you're describing. And regardless, I mean, clearly, there are communication channels that people already have, that, people are in your mobile app, people are on your website, people are reading your email, and you need to use all of these, social channels as well, social ad targeting perhaps, to get the message out that there may be changes to your program or improvements to your program. And then, email obviously is another, very powerful medium where you can dynamically, configure that email and the content to tell each member what they need to see so that it's relevant to them and not just sort of one size fits all. Here are all the changes to the whole program. And maybe, hey, John, as an exec platinum at Advantage, here are the things you need to know. And I think, customers who have already done the work to get their customer data in one place and have a set of tools that are tightly integrated and can take advantage of it, this isn't as heavy a challenge as I think maybe others would experience.
Okay. What about inbound communications from customers? Anything you're seeing there from customers or clients of the program itself? Are they asking for things differently? Are they asking about this? And if so, how should brands be responding?
Is it possible to actually get people on the phone today? Have you had any success doing that? I certainly haven't. Every time I've tried to call somebody for anything, it's the wait times are ridiculous and it's very hard to get a hold of people. So I think that's become a more difficult medium. Obviously there's chat and there's email methods as well. I just don't feel, I mean, usually, and I'd be interested in your experience in this, Mark. A lot of times those other channels, it's very automated. You perhaps have a lower skilled person who's responding. So I don't think there's a substitute for having the right message that has been approved by corporate and people know it's correct and put that out through the proper channels. I think some of these others, it gets a little dicey, frankly.
Yeah, you're right. But it's a balance between training and having that right message and trusting the employee to do the right thing in the situation too. And it's a very difficult difficult thing to do in most times with the pandemic and uncertainty. It's a huge challenge. So when you look at brands who may not currently have a tier structure, are there things that you would recommend if they're interested in pursuing a brand structure in the future, or kind of a tier structure, what they should be considering?
So for brands who don't have a tiered structure, I mean, this is a great opportunity to actually, test and learn with your existing members and do it in an unpublished way. And so, having your customer data in one place, you can look at, the groupings and clusters of those customers. What are their patterns? What are their behaviors? What are their, frequency and spend? And then you can start to look at, what are the tactics that motivate people to move from one spend pattern to another or one cluster to another. And you can do that without having to go publish something. You can do it in a very targeted way by leveraging the same kinds of communication channels, but on a one-to-one or one-to-few basis. And then you have real world learnings that help you understand what's successful and what's not. And you can continue down that path, or you can then take the next step, which is to actually publish something more formal and then, do it in the same way that we talked about some of these other brands do it, like the airlines. But I think starting in that unpublished method and learning is an invaluable opportunity. And I would highly recommend that. And even before that, I think there's an opportunity to, between doing some analysis and studying the data that you have about your customers, also do some research and asking some questions. There's no substitute for, before you maybe try, you could also ask and say, look, if we did these kinds of things, how would you react? Would this motivate you to come in another time? Would this motivate you to book another visit or another flight? And so the data, the research, the testing, all of these things are available for people to do before they actually have to go publish something and make it permanent. Okay.
What about kind of back-end tiers, segmentation, things that brands are doing, obviously with sophisticated tools like yours? Are there risks in doing some of that segmentation if it doesn't kind of align with a published or kind of a published tier that's understood?
Are you asking, is there a risk to having it unpublished as opposed to published?
Yeah, just because people that friends or communication may be different, and obviously there's a lot goes in from AI and machine learning and modeling and what have you. Or do you see that the trend to do more kind of backing, tiers and segmentation and marketing around?
I think the risk is, to the extent there are risks, I think it's worth it because there's no expectation or entitlement if you're reaching out to people individually and saying, hey, Mark, we have an offer for you, an opportunity for you based upon your relationship with us. If you do these things, here's the benefit for you. I don't think everyone else necessarily expects it. I mean, when you asked the question, I was thinking of the phenomenon that I remember people talking about over the last few years, where you get on an airplane and you sit next to somebody and you compare the price you paid for the ticket, and you realize you paid $300 more than them, and it actually caused some friction. People wrote quite a bit about that. But I don't think in this environment, I don't think that's a risk. I think that's something that you can do in a discreet way, and then take those learnings. Like I said, if you want to go publish it and make it permanent, you can. I think the other observation is, I feel like as consumers, we're far more unique today, perhaps, and we have the ability to be observed more uniquely than some number of years back, because we can look at more than just a transaction. We can understand people's passions, their preferences, their social, media behaviors, how much they share, other forms of engagement. So what makes up a customer and the signals you can get about a customer, there's far more rich data today than there were years ago. And so I think it's actually maybe riskier creating these programs that are so structured, thinking that, hey, everyone's going to fit into one of these 4 buckets. There may not be 4 buckets that make sense for your business. It could be 400. It could be, it could be 2. So having that flexibility, I think, is an advantage, and you should take advantage of it if you can.
Absolutely. One of the last questions you have is, premium loyalty. Is that more and more people are adding premium loyalty to the program, depending on the vertical, as you know. What are some of your thoughts about adding premium loyalty? What should brands think about when they're potentially going to add that, or should all brands do that, or is that not something brands should do? What do you look at kind of subscription or premium loyalty programs?
Yeah, I mean, I think so. Just like we talked about tiers at the beginning, I think it's helpful to have some examples that people can get their head around in terms of premium loyalty. So I think the one that most people are familiar with is Amazon Prime, where you pay whatever it is you pay, $14 a month or $100 or something dollars a year. I think if you have the credit card, I think it gets reduced or waived. And then you get a series of benefits. There's another example in the airline space. I don't know if you've ever flown Spirit Air.
No, I'm not.
Spirit Air has the $9 club, which is actually $59.95 a year, and then it renews for $69.95. So I don't know why it's called the $9 club, but that's a something you join, and then you get some set of benefits for doing it, and it's a subscription. You pay it every month, and people do the math, and it's like, look, I'll pay that money because I'm getting more back in return. I don't think everything doesn't need to fit into a nice, neat box. Like, here are my tiers and here's my premium subscription tier. I think it can run alongside, so that maybe it has its own unique set of benefits that make sense for someone paying. And yet there's still this other tiered program that runs separately. I look at the Advantage program at American Airlines. I don't know if charging me money and some subscription to get higher in the program would even make financial sense. If you think of how that program works and how it's structured, it would have to be a really expensive subscription to make up for the revenue that they know they're going to get from me when I get to the higher tiers. So I like the idea of having something that maybe run along with it. Maybe I'm an exec platinum, but maybe I would pay, some extra, fee to get into the clubs and maybe get some additional benefit on board. If I don't get upgraded, I get, free drinks regardless. I mean, those are things that you could add in as a separate benefit without having to fit it, into some, existing structure, which may not make sense.
Absolutely. Last question. Are there, you kind of talked about it a little bit, but depending on the product, do longer kind of purchase cycle, higher price, products or verticals, do they have different considerations than those who have more frequent purchases that may be at a lower dollar amount, or is that going to be kind of case by case as well? And do you have a kind of an example like you mentioned before?
Is this, are you referring to like as it relates to tiers or?
Yeah, right, yes, tiers and the longer purchase cycles with more expensive products. Do you see things working effectively there, and how do you even do that?
Yeah, look, I think like many of the topics we've discussed today, the answer is, I think, very industry and brand specific. Let's take, you know, the automobile industry as an example. You know, a husband and wife, they may have 2 cars. They may buy a car, let's say, I don't know, every 3 to 5 years. They may buy a car or turn over their cars every 3 to 5 years. When your purchase frequency is that low, it's really tough to introduce a program in general, let alone introduce, you know, tiers into the program. Now, there are brands like Tesla where they have very digitally connected customers, where there may be other opportunities to drive engagement, and therefore, you know, having a status within that business or that brand may be possible because you're updating your software in your car on a regular basis, and they have more of a connection with you perhaps than others. There's one brand in the automobile industry I was reading about the other day where they've had a loyalty program and like nobody even knows about it, and it's actually a pretty cool program, but they haven't been able to, you know, communicate it very effectively. So if you can't communicate the program very effectively, tiers becomes an even more difficult concept to communicate.
Right.
So the industry and the frequency, all of these things play into this idea that you know, whether you introduce tiers or not, it's going to be unique to you and your business, and you have to look at all these factors to see whether it makes sense. And you know, for a Tesla, it may make sense. For another brand, it may not. You just need to dig in and see what, you know, what are the qualities of your brand and where does it fit.
Got it. Well, John, this has been very insightful for me, for sure. Definitely, hopefully for those who are watching, and we'll put this out to others as well in the brand community. I think you answered a lot of questions, and hopefully they find it as helpful as I did. And I appreciate your time.
Mark, thank you very much. Have a great weekend and a great Thanksgiving.
Same to you, sir.